munching. So, all right, so we're going to start right now. What's going on, you guys? This is Darth Dividends. As always, we are live, and I really want to discuss some dividend stocks. First of all, my mic was terrible. If you guys watch my previous video, my headset, which I have right here, I just had enough of it, and I just bought a microphone. I should be getting it Saturday. It should be like a real podcast. I really need to step my game up because it does get annoying for you guys and myself when I'm doing videos and it sounds real scratchy. So hopefully I'll get that set up for Saturday and or Sunday and get things rolling with videos. So I wanted to do this video. First of all, I haven't done this in a while. I just got done with one of my exams. Went well, thank God. And I really want to discuss some really good stocks that are out there. One of them some of them I own, some of them I don't. But I'm going to discuss, I actually have a few of them. I have 3 rates that are pretty hot right now. One of them I own that I'm going to well, actually 2 of them I own. One of them I sold. First one I'm going to discuss is Iron Mountain. They just did a big deal. I'm going to probably post that in the section in my, not just comment section, but the, story mode with what the big acquisition, what they're doing with the cloud, service. So a lot of people said with Stag, thank you, Munchin. So a lot of things with Iron Mountain is, with Iron Mountain, basically, this is a stock that, I myself am a nurse. All these medical documents, they have to get stored at a facility for X amount of years. And, after that, they get shredded. Well, these are the guys that pretty much store all this stuff and then shred them. So now what we're doing with what we have to do with billing and what we have to do with technology and everything with, Obamacare. I don't want to get into, politics, but now everything is online. I do think it is a good thing in the long run. Again, I'm more conservative, but at the same time, a lot of the principles with electronic charting, with electronic billing, with scripts and e-prescribed scripts now. If you get sick at your place, your physician says, oh, here you go, I'm going to e-prescribe this somewhere. That's a lot safer. Well, a lot of these medical documents that we've had over the years, say like if I do telemetry strips at work, because I work on a cardiac step-down floor, guess where that's stored? Iron Mountain. So that's one thing, but they are hitting up the cloud service right now. They're sitting at $45.28, right around a 5.68% dividend yield. And with a price per share of $45.28 and with a distribution of 61 cents, almost 62 cents, it's very attractive. So that's one stock that I'm going to continue to buy. I have that in my M1 Finance dividend portfolio. It's just they're adapting. If you don't adapt with technology, you're screwed. So that's what happened with Sears. That's what happened with Blockbuster. Okay, those guys didn't adapt. Iron Mountain is adapting. So that's one thing that's important. Do you realize that Sears was one of the first credit card companies and they screwed that up? So imagine that. I mean, you're one of the first credit card companies and you screw everything up. But these guys are adapting. I think they're very aggressive and they're adapting with the time. Again, I'm not a financial advisor, disclaimer in all of my in my description, but I feel very strong with Iron Mountain. I know I changed the distribution percentage on my M1 Finance dividend portfolio. Write that one down, IRM. The next stock I would like to discuss is Americold Realty Trust. Now, I did a video a long time ago where I really knew with fixing headsets and stuff, it was really scratchy and stuff. But Americold, COLD is a symbol. They're sitting at $38.75 with a 2.31% dividend yield. It's not too high, the dividend yield, because I like 3 to 5%. But it is increasing its dividends over time. So it's right at 22 cents it yields per share. But one of the things that really attracted me with Americold Realty Trust, COLD symbol, is everything that's frozen, they store it there before it goes to the stores. So look at their website, americold.com. They basically store that stuff. Now, pandemic-wise, I mean, you look at Iron Mountain and Americold, or like a recession, those guys are recession and pandemic proof. Now, sure, stocks will go down because of people hitting the panic button with real estate and the financial sector, if you notice that with the pandemic. But a lot of us did capitalize on that. Iron Mountain's one that I capitalized on. And the next one I'm going to discuss is Store Capital. So that yields a 4.19% dividend yield. It's right at $35.76, right around 36 cents a share that it distributes. So that's not bad at all. So Store is one that Buffett owns. Now, those are like tenants and stuff. Now, those guys took a huge nosedive. And as I said before in my previous videos, EPR Properties, Store Capital, WPC Carry, as you just mentioned, those guys took a huge nosedive. So what I did, and I always, encourage this with you guys, is have $1,000 to $2,000 saved just for strike money if something like this happens into these really good stocks. Because WPC Carry, as you said, Munchin, that's a very good dividend stock. That's a real estate investment trust that's increased its dividend over time. Very attractive. And also, Valerian, you also mentioned Gladstone. Land, as Greg said, I really like Gladstone Land Corporation. Gain is the business development company that I like with Gladstone. So I just want to let you know, that's a really good business development company, in my honest opinion. I really like those guys. I also like Main Street Capital. So you guys can comment at any time. I'll respond, and any time. So tell me some good stocks that you like. But I really want to get into, I'm going to keep on going. I will respond to your comments as I go by with stocks and everything. So just type away. One of my stocks that can't stand this company, I have to deal with this, with my energy bill. But First Energy is a big juggernaut in Ohio. Thank you for that like button, by the way. But First Energy is a very big company in Ohio and kind of like the Northeast, where they control the energy. I mean, power, my whole apartment complex is controlled by First Energy. They are such a juggernaut, okay? Power goes out, we are at the will of these guys. So they are a very strong power company. Like the outlets go down in Ohio, they're there. I'm pretty sure in New York they go down. They're just all over Ohio. They generate so much money. And they had some issues with corruption, with Larry Householder, with all this bribery and stuff, and with some power plants. And they've been down, but their dividend has done very well. And I'm pretty sure they're in SPHD last time I checked. So they're in the SPHD ETF. And I used to own the SPHD in the ETF, but I got First Energy, I got Lumen Technologies, which I just re-added. So think about this. We need, these type of companies because, how are you going to deal with your air conditioning and stuff? These guys are strong. They're not going anywhere. They're just going to generate more revenue from us. And this is a big money grab for them right now at this time. You know what's crazy with First Energy? They actually doubled us in our complex one time, and I couldn't do anything about it. It didn't matter how much that proof I had. It just said, well, that's just our policy because you signed with us with First Energy. So they're that powerful in Ohio. But, I might as well just invest in these guys. They generate a lot of money. They're in demand. And guess who, the stadium for the Browns is First Energy. So usually a lot of companies, if they're named after, they have their name in the stadium, they're pretty good. Where do you come down on QYLD? Well, I like QYLD. It's a covered call ETF. I don't have it. I'm not too experienced in covered call, doing covered calls. I know a lot of people that generate a ton of money with it. And that's one thing I'll probably have to figure out once I'm done with graduate school to master it, because I can really, blow a ton of money doing that, and just not if I'm not smart. So thank you, Kate. And, the thing is with a lot of these covered call ETFs are, they have a lot of stocks that I wish I owned or wish I had the money for, and they just do a covered call option. They generate really good passive income with it. So, it has a pretty good yield. I know some articles said, I don't know if it's sustainable. Well, I mean, these guys kind of know what they're doing. I was totally anti-global X for a while. And, I kind of changed my mind and just really like the dividend yield. I started listening to and the people that I surround myself with. And honestly, one of the reasons I, created this channel is for a lot of you guys to find out, the people that I kind of collaborate with or are around, check out their channels as well. So this is a pretty big event for networking that I have on here as well for you guys. The next one is Pfizer. Pfizer is obviously, everybody loves Pfizer, is a dividend stock that, a lot of people just want to say, well, it's just the vaccine that's getting it going. I don't think so, because, I can tell you as a registered nurse how many meds I pass, statins with people that have strokes, that have cardiac issues, that have, hyperlipidemia. Statins are one of the biggest things out there for medications, as well as beta blockers. I mean, unfortunately, people are getting sicker. I mean, I hate to say this, people are getting sicker, people are being complacent. All you guys that are listening, like, want to better yourselves. You want to learn how to make income, but there's just people that say, oh yeah, I want to invest. I'm going to put money in my 401k, this and that, but they don't. And unfortunately, this complacency, these pharmaceutical companies are making a ton of money from people not taking care of themselves. I mean, I encourage you guys to get the vaccines. Pfizer is a pretty good one. I got the Moderna one. But, the thing is, Pfizer is a very strong company. Just because it's not just the vaccine, it's what they carry. And they carry a lot of antibiotics in the hospital. I mean, they carry a lot of medications that are IV pushes, and those are in demand. So, those are always going to be in demand. I mean, you're always going to get sick. You're always going to need antibiotics, whether it's orally or whether it's IV. If you get a infection, sinus infection, some of those medications could be from Pfizer. So that's one thing I just want to emphasize. I do a lot of videos on Pfizer because they're so down. I mean, they're sitting right at $38.79 with 4.03% dividend yield, and it's right around 39 cents per distribution. So you got First Energy and Pfizer. I mean, First Energy, like I said, is a 4.11% dividend yield, and Pfizer is 4.03. These guys aren't going anywhere. They're just going to generate more money. I mean, nobody's buying. Think about this too with First Energy, okay? It is ridiculous with these houses. I mean, people are asking me, why don't I buy a house right now? Well, first of all, I'm in graduate school. Second of all, I'll get outbid by like $30,000 or $40,000, which is crazy. And guess what? Because I'm in my apartment and I'm paying rent, it's held at the will of First Energy. So they're kind of capitalizing on people who aren't moving out. So that's one thing I want to emphasize too. These guys are just so powerful. The next one is Kraft Heinz. I do not own Kraft Heinz. They're sitting at $43 and right around 91 cents with a 3.67% dividend yield. Yields right around 40 cents per share. So Kraft Heinz has been around. It's a pretty strong stock. Obviously, if you think of ketchup and all that, and some mustard. So they have a lot of products out there, and sitting right around that's a pretty attractive price. Now I noticed that their dividend went down over time, but eventually they'll be right back to where they are. So that's one thing I really want to emphasize is when I invest in stocks like B&G Foods, BGS, like I said in my video, BGS has a high dividend yield. They have Ortega, they have all these foods, they have everything that's on the shelves that people buy. That's the same thing with Kraft Heinz, Kraft macaroni and cheese. Think of how many college kids, not just young kids, but college kids, go to the store, buy Kraft macaroni and cheese because it's so cheap. And there's a lot of products that they carry for not just, people that are, they're just everywhere. Okay. I mean, mac and cheese is like one of the biggest things this summer that people eat. I know it's not the healthiest, but people will, mac and cheese, you got the condiments, you got the ketchup, you got the mustard, you got a lot of stuff that Heinz carries that's always going to be in demand. Now, especially in the summer, I mean, people are grilling and stuff. So that's really out there that people need. Another thing I want to mention, I know I did post a video and I mentioned this, is McCormick. McCormick it's a little bit up there. It's right around $80 to $100, but it has increased its dividend over time. This is a stock that everybody needs. It's seasoning. Look at how many times people go in the store and look at McCormick and how busy, this company is. Every time I go to I live in Northeast Ohio. Every time I go to the store, I mean, McCormick has their section, and these things are just about gone because people are grilling, people are meal prepping. So McCormick is a really big company with seasoning. Not high dividend, but it has increased its dividend over time. So I do want to mention that to you guys. Feel free to, again, if you were new on here, feel free to comment at any time. And the next one is Kellogg's. I made a post on this with my Twitter account. Kellogg's is rated at $66.44 with a 3.4% dividend yield. So that's right in the range I like. I like 3 to 5% range with my dividends. Obviously, if it's a little bit higher, I'd consider it like a unicorn stock. I got a bunch of crap with posting a video about AGNC. I don't like its model. I mean, ABR, it's a M rate. Write this down or type this on your phone. ABR. That's a really good rate that follows the style of AGNC. But Kellogg's is, the cereal. I mean, look at all these kids. You go to the store and you see all those kids in the carts and pointing right at the cereal, and a lot of it is Kellogg's. So that's one thing too that's always going to be in demand with a lot of these stocks. So if you guys are just jumped on here, I went over Iron Mountain. IRM is a symbol, cold, and feel free to interrupt at any time, make a comment at any time, and make sure, if you guys are new on here, make sure you subscribe. And don't forget to smash that like button. Store Capital. I also mentioned First Energy. I also mentioned Pfizer. I also mentioned Kraft Heinz. I also mentioned, I got one more for you, Heinz brand. So, I wear Heinz boxers. Look at how many times people buy underwear. And Heinz it's a 3.07% dividend yield, sitting at $19.42. In a year, you get about 60 cents. So it's about 15 cents per quarter or quarterly dividend. And, that is, which one's recession proof, Teresa? Let me know which one is recession proof that you made a comment on. The Kraft Heinz is another one. Matthew Ramey gave me kind of, I looked at his model and like, that's a pretty good one. Yeah, I think all of these I would probably consider recession proof. Iron Mountain, yes. Americold, people need food. Store took a huge hit though. So that's one thing that did happen with Store. They took a huge blow, when the pandemic hit. But, a lot of these stocks are still down. I've really emphasized EPR properties. That was one of my favorite monthly dividend stocks. Not like of course. How do you not like but EPR properties, they're going to probably be back in time once everything starts opening up again. And everybody wants to talk about this AMC and short squeeze. Some people made a ton of money. Some people lost a ton of money. But, I've really been mentioning EPR properties because, they're so down right now. If you Google search, just type in EPR stock, look at how down it is. Eventually it's going to come back. They're going to start distributing their monthly dividends. I spoke with investor relations. They said eventually they will start distributing their monthly dividend again. So they're so down right now, but they're going to be back with a vengeance. So it's going to be really interesting. But gosh, I mean, I'm going to be honest with you. I'm so glad this pandemic's just about over. I mean, what a pain. I mean, a lot of us, you know, hopefully none of you guys lost your jobs. It was very stressful for me as a nurse. I mean, working on COVID units and stuff, seeing people tank real fast. I mean, it was great to get the vaccine, but there was a lot of people that, you know, got tore up from this bug. And, you know, it's one thing to, you know, it's very sad with what happened, this whole situation. We probably have friends or family members that are really affected by this, or people we know that were affected by this. But, you know, when a pandemic or recession hits, the two sectors that take a huge blow are usually rates, real estate, and the financial sector. So I bought into Huntington Bank shares. That's another one, HBAN. Very nice dividend yield. It's a little bit, I think, 3 to 5%. I took advantage of that. I took advantage of KeyBank, KEY. I really like their dividend history with KeyBank. I mean, feel free to let me know if any stocks are on your mind too. Just keep it up. And I mean, wow, we got 16 people on here. This is good. I'll probably have to do this more often. And you know, I like KeyBank. I mean, I put money in KeyBank. It's a good one. KeyCorp is the stock. I don't have the money for JP Morgan. Eventually I will. I think with my M1 Finance dividend portfolio, I will. By the way, if you look at my description, you sign up, you get $30. I get $30. So it's a good startup if you're looking at getting like a stock like AT&T or something that's, I think, less than 30, right around that. And I did rebuy AT&T. So I also did a video on some stocks in the communications sector that are Canadian. BCE is one of them that I bought. I just got back with Lumen Technologies / CenturyLink. I really like that stock. A monthly dividend stock that I would consider a big rival with Realty Income is Agree Realty Corporation, ADC. Just changed themselves to a monthly dividend. Now, their dividend yield is not as hot as Realty Income. It's not as expensive. Oh, geez, my neighbor had some noise. But it's another one that's a pretty good rival. So now I'm going to give you guys a few minutes to make some comments or any good stocks or any questions you have for me, and I'll be glad to respond to that. So I'm going to give you guys a few minutes. Feel free to type right now, because I'm going to look up a few stocks real quick. I'm going to look at McCormick's price real quick. Yeah, McCormick is right at 89.68 with a 1.52% dividend yield. It's not too bad, but it's a really good one for a traditional or Roth IRA. Holy moly. Hey, look at this on Google when you get a chance. Look at MKC. Wow, that thing jumped up like crazy. A lot faster than when I did my last video. But anybody, any comments, any questions or anything? And check and see if people are. Thank you, John, with the comment. I'm going to be honest with you guys. I mean, it's the scratching sounds are bugging me too. I really need to figure out how to do that. I'm not the best with being technologically sound, but you're going to see a big, what would be MPW? Of course I have MPW. That's in my portfolio with M1 Finance. How many shares do I own with that? Let's see, Greg, if somebody put a gun to my head, what would I buy tomorrow? Realty Income's number one. probably, all right, how much money? Greg, give me a situation. I tell you, if you give me a scenario with money. How many shares do I own at MPW right now? I'm looking at that. I own 8 shares at MPW. Absolutely will I buy more MPW and be long in them. It's just too attractive. Looks like, what is the average share price? 21, 25. How am I going to say no to that? 5,000. So if somebody threw 5,000, okay. If I had $5,000 and I had a gun in my head, now would I have to split it like 3 stocks within 5,000? O would be like O would be definitely one of them. Probably probably 25. Let's say 2,500 and O, 2,000 and WP carry, and I don't know. That's a tough call. I'd have to make a comment, or I'd have to give you a response after that. That's a tough one to really think about. MPW though is yeah, that's a really good one. That's one that you guys should look into. Medical properties, and with MPW, like I said in my video. All right, Greg, here we go. I'd say Realty, Income, WP Carry, and Duke Energy. Dude, I love QYLD. I'm jealous that you have 100 shares. I mean, kudos to you. I mean, wow, that's a lot. I mean, Matt Money is up there with owning QYLD. I can't believe how much he owns with that. But that's really good. I know a lot of people that are trying to retire. They're doing cover calls or selling it and throwing in QYLD or RYLD. That's a good monthly dividend stock. I mean, I have my strategy with QYLD, RYLD, and XYLD with my M1 Finance dividend portfolio. I posted a video on that a little bit ago. But my strategy is I have like 4% with QYLD, XYLD, and RYLD, a little bit of Brookfield Real Assets Income RA. Now, Brookfield Real Assets Income, I'm just going to let you know that, it's like a 2%, it's high up there, but you get a nice yield at like 19, or it's a nice yield, but the share distribution, you get 19 cents, but it's like 2% or something for the fee or something. It's high out there. Yeah, 100 shares. I mean, I'm going to have to, how much would that be with 100? Let's just say that's like $22. I mean, I would just say if it was 0.22, that's about $22, which you can reinvest and throw it in there. How much would that be? Not too that. I like it. I mean, I'm all about it. Gosh, I wish I had that amount. I could buy shares like crazy. I'm only at 20 or so. I can't answer that question. Will it last for at least 10 years for a retirement one? That's not. I would probably ask you why, Global X with that. I mean, there's always a risk with that. I wish I could answer that question. I mean, I'm not a financial advisor, but I like the way it's modeled. I'm hoping so. I mean, that's why a lot of people invest in QYLD. There's no guarantees, but it's really good to treat as a retirement pension. I mean, I have a strategy to, I have $1,000 to $3,000 a month of my monthly dividends, and right around 2,000 to 4,000. Yeah, I like Jeppy as well. I don't own it. GW does, and he's really strong on that. That's a very good one for monthly dividends. I mean, GW is. I don't know if you guys see him or if he ever comments, but that is a very good monthly dividend stock. He really emphasizes that in his videos. I'll have to do a collaboration video with him. I mean, he is the ETF guru. I'll have to try to get him on here live one of these times. I mean, you want to talk about the wise man that whacks you with his cane if you don't know what you're talking about. ETFs. He's the guy that would do that to you. It's like I don't know if you ever played Zelda back in the day, but he's like that wise man in Death Mountain and stuff, giving you the advice and whacking you around, slapping you around. He really knows. I mean, he knows his shit with ETFs. Very impressed with that guy. He's pretty strong. He's pretty good with covered calls. I got to grow a pair and eventually look into investing with that. But these guys know what they're doing with covered calls. Eventually I will, but it's just not a good time because honestly, I started this dividend investing channel right around 2019. I started with nursing and fitness. I mean, I had a lot of followers. You'll see like it fluctuates. Probably the people that were in nursing and fitness, they're starting like, we don't care, and like leaving, and all you guys are joining. So it's really funny to see like I'll lose 5 followers from nursing and like 7 or 8 from and gain like 7 or 8 from investing. It's kind of funny looking at my channel, but it takes time to really understand covered calls. I just haven't mastered it, looked into it. But, it's a real estate investment trust, Steve. It's, I did a video on WP Carey. I think it's pretty strong. I mean, I wouldn't invest in a real estate investment trust if I didn't believe in what I was investing in. And what does it hold in properties? I'd have to double check. I mean, let me see their overall stuff. WP Carey. I mean, it's net lease rate. I mean, that's one thing. I'm on their website right now with their portfolio overview. They have 1,261. I know I had IAPR and I sold it. They have 1,261 net lease properties. Leases with rent escalations, 98%, 98.3% occupancy. That is very attractive. Their graphic diversification is in the United States, 62.4%. Europe, 35.6%. That's pretty damn good. Industrial, 24.9%. Overall Warehouse, 22.2%. Office, 22.1%. Retail, 17.7%. Self-storage, net lease, 5%. Other, 8.1%. The other includes education facility, hotel, net lease, laboratory, fitness facility, theater, student housing, restaurant, and land. I like that. I mean, that's one thing I looked into. IIPR is a little bit down. It yields a very nice dividend. And, the thing about IIPR is it is a little volatile, but, you're still getting something out of it. If you invest in MJ ETF, it's not very good. I don't like it. Coronos and all this stuff, it's, goes up and down, but you're going to get a good bang for your buck with IIPR. I used to own it. If it wasn't for I'm just reading this at the same time, M1 Finance, I couldn't fix, the dividend distribution. So I sold it and threw it in Iron Mountain and LTC Properties, but it just got so big and so fast, it blew up like crazy. I could not keep up with it. I ended up selling it. And, it sucks to do because it's just so strong and it's increasing its dividend over time and it's acquiring more and more farms. I mean, it's like land, that I had with Gladstone land, just acquired a bunch of things and it just got bigger and bigger. But I'm going to get going. Wow, we had a ton. This is a lot of fun. I'm going to probably do this more often, especially when I'm done with my exams. I just did pretty well in this exam. I need to celebrate. I'm going to probably go get a drink later tonight and work out legs tomorrow. So I got to behave myself. But yeah, that is some really good things. And again, reinvest your dividends. I mean, reinvest, hold. And I always say the phrase, I really like the book of Five Rings. I like to apply like the art of war and stuff. I had it in my description, but it teaches discipline. Like, the phrase, fight the way you train the way you fight. Would you hold on to stocks in more than one brokerage, or is it wise to do just one? Well, let's see. I have E-Trade. I have stocks in E-Trade. I have, what were the 5 stocks? Well, I added, let me know if you have a pen and paper. I'll tell you right now. And I added 3 rates to that too, if you guys just joined on here. But I'll type it in. So my 3 rates. Then my 5 stocks are First Energy, FE, PFE, Pfizer, KH, HBI, and K. All right, so those are my 3 rates that I just mentioned that I really emphasize. Iron Mountain, Americold, Realty, Trust Cold, Store, and then Pfizer, First Energy, Kraft Heinz, Heinz, and Kellogg's. So K, like a pitcher strikes somebody out and you got a K. So that's one thing to just remember. So I'm going to get going. You guys have been fantastic. You're almost on here for an hour. So I'm going to enjoy this victory today. And you guys have been awesome. I really enjoy doing videos. Yes, I will do this again. Just make sure you make comments. Again, all these videos are free for you guys. That's why I do it. I don't believe in Patreon, charging people. Why the hell would I charge someone? I mean, this is for entertainment purposes. This is for, I show you my dividend investing journey. I have a goal to make 100,000, well, not make 100,000, that'd be a lot, but at least have $100,000 dividend portfolio in M1 Finance. I have an E-Trade dividend portfolio on the side. I'm thinking about creating a Roth IRA with M1 Finance. And I have Fundrise, obviously, but I'm thinking about expanding a few things and going from there. So if you are, again, new to this channel, make sure you subscribe and hit the notification bell, smash that like button, and you guys take care and have a good night.